Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it the trend is your friend until, of course, we all know that saying, right? Until it ends. Well, we'll see. Right now, it hasn't ended, and all these indices are trending very well. We're going to take a look at the Dow Industrials right now, and then we'll take a look at the Russell 2000 ETF IWM. Take a look at the VIX, see what it's doing. One other indicator, the high lows on the New York and the Nasdaq. And then I want to check in a little bit kind of underneath the covers. Everybody's always talking about tech and semiconductors, and semis have been very, very strong. But we're going to take a look at the banking index, the S&P Banking Index, the S&P Regional Banking Index, the Homebuilders, and real estate, and see what is going on there. All right, so let's start off here with the side-by-side view. The Dow was up 17 points this last week, so barely moved. It almost doesn't even look like it's basically flat for all intents and purposes, but it's still pushing week after week after week in here. This is the fifth week in a row. The trend is on the ADX on a weekly is at 28 and rising. We're not seeing any divergence. A little bit here on DI plus, not on DI minus. S&P 500 up 68 points, same kind of thing, up very strong, 5 weeks in a row. The RSI on the weekly just continues to push, no divergence on the directional indicators. When you look at the NASDAQ 100, it was up, let's see, I've got that down here somewhere, 320, I believe. Let's just move this over. Yeah, when you round it, 320 points, and it's the same thing. 5 weeks in a row, no divergence showing up. Maybe slightly on DI minus. It's a little bit hard to tell. But right now, we're trending, and same thing on the ADX on both of these. The S&P is a little bit more in terms of rising here recently. Let's take a look at the side-by-side with the industrials and the transports. What a week for the transports, up 416 points when you round it, and it closed above the highs of all these weeks in here. This is the highest close since when? Let's go back over, looks like right here. August 6th, the week of August 6th, 16209.8, yes. The highest close since, well, actually it closed above that, so you got to go back over here, the week of July 30th. So this is pushing hard to the upside right now. So that's a pretty strong move by the transports. All right, let's go take a look at the industrials. Well, here's the weekly we just talked about, and you can see this dash line is the prior all-time high that occurred in January of 22. And then over here on the daily, here's what's going on with the daily. And, you know, we've had a lot of, I don't know what, a little bit of clustering going on as it continued to try to push higher. We are getting some divergences showing up in here. I continue to work this wave count, and it's this count right here that says it looks like we're in a B wave. And we're into the first zone of that B wave, okay? So what am I talking about with the first zone? I'm talking about B versus A, okay? B versus A, my targets that I put on here, 123.6% Fibonacci relationship and 138.2. And then I look at wave C versus A of this zigzag. And then this is where C equals A, and here's where the next Fibonacci that I would look at, 138.2. So the first zone is right in here when we're right there, okay? So we push through this zone. My next target's going to be up in here, but you know, this is looking a lot like A, okay? But it's also looking, you know, kind of impulsive. So I do have an alternate count. The alternate count, if we continue to push higher up into here, and especially if we get above 138, and it's the same thing on all the other indices, we get above this 138 level, then I'm going to really be moving to the alternate count that says we got something a lot stronger going on. But I need the market to tell me that, okay? Right now, The market's just playing along with this scenario so far. And if we have something stronger going on, what that tells me is that cycle wave 5 and super cycle 3 hasn't really ended yet, and that wave 5 is still underway. So just beware. We've got, strong trends in place. I'd be very, very careful of shorting this thing. That's just my thoughts. I'm not going to tell you what to do. You have to do whatever you have to do with your own money. I'm just telling you, we got a strong trend in place right now. We'll see what happens over the next few weeks. Okay, so that's the Dow on a weekly. Let's just take a look on the daily. When I look at the daily, we really have not had very many corrective moves in here at all. And the only thing we've had is right here. So my alternate on this is to say this is wave 1 and this is wave 2. But again, very shallow for a wave 2. But we haven't had much of anything in here to begin with. So this is the picture we've got. And yeah, here's the zones we talked about. So that's where we sit with the Dow Industrials. Now, for a different picture, let's take a look at the Russell 2000 ETF IWM. Now, let me pull that up right here. Okay, let's take a look at this weekly view. Something different's going on with IWM, I think. Okay, so I drew all these fan lines because I thought it really looks interesting to me in terms of the breakout of the trend line, the pullback, the breakout, the pullback, the breakout, the pullback. This got a little deeper, the breakout, and we pulled right back to it here on the week of January, mid-January, week of January 14th. Nice move we had this last week, up $4.93, almost closing above the high of the prior week. Didn't quite get there. So this is looking and acting strong, and here's the move that it did on the daily. It kind of looks like a swing move to me that's under development. I mean, it was up 319 on Friday, continued push from Thursday. So the Elliott Wave count that I have moved to is to say this B wave right here, this is this Y within the B wave, this WXY, is playing out like this in terms of an ABC, and that this C wave is underway. So that's what I'm watching. And so, of course, in a C wave, you're looking for 5 waves of a zigzag. And so right now, it looks like we've had, let me get my marker, it looks like we've had this, 1, 2, and that we've got a third wave underway. That's the way it looks as of today. We'll see if the market continues to confirm and play along with that scenario, but that's what I'm looking for. Okay, so that is where we sit here with the Russell 2000. It looks like it wants to go higher. Okay, let's take a look at a couple of indicators. Let's take a look at the VIX. Let me go back to the moving average view here. Let me pull up the VIX. So let's see, on Friday, it was up a whopping 14 cents. And for the week, down 92 cents. So you could see we're just hanging down here in the doldrums. I mean, the weekly close, you can see where we closed. We've just been clustering down here. And all of these are lower than anything that we closed at in 23, except for maybe this 1 week in August. But I mean, it's kind of reaffirming that, we're not going anywhere with this right now. The volatility, everything's calm. There's no fear in the market. When we take a look at the high-low, let's look at the New York. And let me line this up a little bit better. There we go. Okay. So on the New York, wait a minute. Let me do that better. Okay, this is a little better. On the New York Stock Exchange, we had 163 more stocks hitting 52-week highs than lows on Friday. So we continued to bounce. We've had a couple of days where we bounced below zero, but it just comes right back up and stays in the positive territory. So that's the picture with the New York. Let's take a look at the NASDAQ. Okay, so here's the NASDAQ, plus 212. So for the first time in a while, the NASDAQ has had more than the New York Stock Exchange in terms of the net high-lows. So 212 more stocks hit 52-week highs than lows on Friday. And you know, this is a pretty good little push. There's only one day in July that it was stronger, except for this handful in December. It was about 5 days or so in December and one day in July last year, stronger than the reading that we just got this last week. So pretty good strength just kicked in on the NASDAQ. Now, let's take a look at some of the ETFs that really kind of tell us a little bit away from the technology, away from the semiconductors. Look at the banking index and then home builders and real estate. And let me go over here to the ETFs, and let's start off with KBE, and I want to focus on the weekly chart because here's what's going on with that. Look how this has broken out of this trend. Now this could be counter trendish with a little zigzag, but the fact that it broke this longer term trend is somewhat positive to me, and the way this looks like it wants to continue to push. And of course we come up here and take out some of these prior highs in this trend, and it's going to get even more positive. But right now this looks like the banking index is trying to push higher. And so if this is breaking out to the upside, is the regional banking about to follow suit? Because here's this long-term trend line also with the regional banks, and it's just, they're right there. They're right down below it. And it's going to be really interesting to see. So, you know, there's a lot of negativity out there about, you know, the regional banks, et cetera, and it's going to be really interesting to see. We break that trend line and something else is going to be going on. And then when we take a look at the home builders, XHB, here we go. So look at the strength in the home builders. They just continue to push. Now we are getting a little bit of divergence showing up, but again, you got to be careful because divergence can disappear. But right now, this is trending very nicely. This little thin line right here, the ADX is 33.9, almost 34, and rising. And of course, you don't need the ADX to tell you that we're in a strong uptrend. Look how we're just right above the 10-week moving average and continue to push. And we pushed above the all-time highs that occurred back in 21. We did that the week of December 3rd of this last December, the week of December 3rd. So right now, the home builders, you know, for everybody talking about, you know, home availability is the worst in, you know, X number of years and all of that kind of thing. Well, there's apparently a lack of homes available because a lot of the baby boomers don't want to move. I mean, for a lot of reasons. You know, everything's very expensive or gotten more expensive. And anyway, you know the story. So right now, this continues to look and act strong. So let's take a look at real estate. IWR right here. Now, this is interesting because, again, you hear nothing but negative stuff out there about the commercial real estate market. And that's not to say that it isn't having problems, but not all commercial real estate is equal. And of course, this could be, you know, it could be a lot of things into IYR. But right now, this looks like a bull flag to me. So it just looks like it's ripe for another push out of this and breaking higher. You know, flagpole, flag, and then we push higher in here. We've broken this trend, this little trend line right here from the beginning of January last year. So this is a little over 12-month trend line, okay? And now we've broken out of that. We pulled back a little bit. It just looks like it wants to go higher. So it'll be interesting to see, does that play out? Does that push like that? So some interesting things going on underneath the surface in here in the economy. So we'll see how that plays out over the next few weeks and months. All right, everyone, if you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to that YouTube channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone, have a great week. We'll talk to you on the next video.